Everyone, welcome back to my channel. My name is MJ and this is MJ's Place, where we discuss tips for financial freedom as well as encouraging financial literacy and empowering one another to be the best version of ourselves as possible. I want to thank everyone today who have subscribed to my channel, who was watching. Please do me a favor and share, like, and subscribe this video as well, so that way I can continue to bring you content to help us break through to new levels together. And with that being said, we're going to go ahead and jump into this week's topic, which is going to be Credit 103 in our series. And we are going to talk about what makes up a credit score. Really important to know what moving parts are in a score and how each piece is graded, so to speak. So again, we're going to be talking about what makes up your score. So first of all, let's review what is a credit score. A credit score is a number that is used to predict how likely you are to pay a loan on time. Credit scores are used by companies to make decisions such as whether to offer you a mortgage or a credit card. They are also used to determine the interest rate you will receive on a loan, credit card, and the credit limit. FICO stands for the Fair Isaac Corporation. FICO was the pioneer in developing a method for calculating credit scores based on information collected by credit reporting agencies. Today, other companies also have credit scoring formulas, models, but most lenders still use FICO scores when deciding whether to offer you a loan or credit card and setting the rate and terms. Banks may also use FICO scores when approving checking and savings account application and setting the terms for those accounts. Now, that is a really interesting subject that I want to touch on really quickly just for the line of work that I'm in. That is so true. What is done is what's called a soft pull. So that means that it doesn't have a hard inquiry. Soft pulls actually will give you, in most cases, just as much information as a hard pull. Hard pulls basically are just to get the little pieces of information that are not available for the soft pull. So like the super specific information. But lenders, we can get a pretty good understanding of the level of risk that's going to be associated with a particular client, customer, consumer, borrower, based off of what we get off the soft report, the soft pull. So that's really important when you are learning about credit or looking to improve your credit, is that having a negative score, having a negative credit profile can prevent you from getting the best terms on a checking and savings account or even opening an account, period. Because remember, the point of the FICO score, whether it's Advantage 3, Tri-Merge, whatever we're calling it, is to evaluate the level of risk. Are you trustworthy? If we give you this money, will you give it back? And will you give it back on the terms that we agreed upon? So what composes a score? A credit score is made up of the following segments. We have, I just wanted to make sure I spelled segments right. Sometimes I forget to run everything through spell check. So it's payment history, which is 35%, amount owed, which is 30%, length of credit, which is 15%, credit mix, which we discussed in our last video, that's 10%, and new credit, which is 10%, making a total of 100% of the score. Now, a lot of diagrams that you'll see of this information will be pie charts and things of that nature. Bless the Lord, I am still working on graphing and charting. I promise I'll start to incorporate that. But for now, pretend that there is a circle there and that it's segmented into different sections. But we are going to break down each section in just a moment. So payment history, which is 35%. Payment history shows how you've paid your accounts over the length of your credits. The evidence of repayment is the primary reason why payment history makes up 35% of your score and a major factor in its calculation. Research shows that your track record of payment tends to be the strongest predictor of the likelihood that you'll pay all debts as agreed to, and as you can imagine, the lender's number one priority and your past record of a lender's number one priority is your past record of paying back or not your loan. So basically, again, how trustworthy are you? It's amazing because as I've entered into the financial world, and as I've been educating myself on the different aspects of it, like higher level lending, like such as preparing to buy a home and things of that nature, I realize how important having a credit score really is, and like to really understand what it's made up of. And payment history is huge. So much so that even if you have a decent score, so let's say your score, and when I say decent, I mean like 650, between like 650 and like, let's say 680, 690. So a pretty good score, decent score. Okay. So if your score is in that range, but let's say you've missed a few payments in the past year, 6 months, you're going to have a hard time getting approved for credit, because it's a really big sign of distress. And the lender basically is like, okay, so are you gonna get money from us and do the same thing? Are you gonna pay us late? Is there misinformation on the credit report? Maybe they don't really have a job. So it just lends to a lot of other negative aspects that a creditor can kind of foresee, and then it makes them not want to extend you credit. Extension of credit, I'm gonna say this indefinitely to piggyback off of what my leader was talking about today. I'm gonna talk about it until I am satiated that we can move on from this subject. Um, Paying on time, and you're gonna see utilization in just a moment. Those things are huge, huge indicators of what they can lend you. It is a wealth building tool. Let's talk really quick about what's going on right now in the world, as far as war and things of that nature. A lot of people who are affected but aren't destitute are individuals who have good credit. Why? Because they have things like credit cards where they can earn cash back on gas. Those are rewarded, as we learned, to people who pay on time and have good history. They can do things like they literally can make money up here out of nowhere, right? Anywhere. They can get home equity lines of credits, they can get personal loans, they can take out the equity in their vehicle. Being able to borrow someone's money during times, pay it back at a low interest, and maintain that level of trust while still meeting your immediate needs, mind blown. Let's move on. The amount owed, this is also going to be referred to rather as our utilization. So our utilization, that's 30% of our score. So again, payment history and how much debt do you carry, more than half of your score. Amounts owed refers to how much debt you carry in total. However, the amount of debt you have is not as significant to your score as your credit utilization. So again, to not to get too granular, when you're talking credit utilization, that's talking more like your high credit balance. So like if you have a $300 credit limit, how much of that are you utilizing? And then the amount owed is how much are you carrying of that on a month to month basis. So that's why a lot of people, what they'll stress individuals to do is not just make the minimum payments, to do your darndest to pay off at least, okay, so if you have $300, you need to pay at least $200 of that, never carry more than 10%. But really, you want to have like no percent, right? You want to have under 10%. The less you have, the better off you will be, I promise. So let's jump back into it. So as your credit utilization, when a high percentage of a person's available credit has been used or is being used, this can indicate the person is overextended, risky, and is more likely to make late or missed payments, because basically you're one missed something from disaster. Again, just like we learned in the, I say we learned, but I'm gonna say it sparingly, meaning if you've actually read the book. But as it discusses in The Richest Man in Babylon, when you're loaning people money, they want to, can this person pay it back? Are you hitting all of those check marks? So again, this really ties into that. It's an age-old principle. FICO research has found that your level of debt is predictive of future credit performance, because the amount owed typically impacts your ability to pay all monthly credit obligations on time. Now, don't worry if you have that. It doesn't automatically make you a high-risk borrower. However, as your balances increase, so does the probability of difficulty meeting your monthly payments on time. But that's just a part of what determines your score. So just like I was talking about last week about the credit mix, if you have 25 credit cards on your credit report, that's not bad. But if you're carrying a high balance on all 25 of those credit cards, that's no bueno. You want to be able to show that you can manage what you have, period. Okay, length of credit history. That's going to be 15%. Now, even some people who haven't had credit for a considerable length of time can still have a high FICO score if the rest of their credit report looks good. History will always have a positive effect on FICO scores. So again, if you've had a credit card open for 6 years and for 6 years you've consistently paid it on time, that has a much more greater impact than you've had a card open for 3 months and you've paid it on time. So they both are synonymous. It gives the lender a clearer snapshot of how you handle things during circumstances. Like, for example, when you apply for a home, you're going to have that mortgage for 30 years. A lot can happen in 30 years. So again, if they look at your length of credit history and they see you're kind of bopping from card to card, or you've recently opened up a preponderance of accounts, so on and so forth, that's risky. You want to be as non-risky of a borrower as possible. So when it comes to length of credit history, your FICO score takes 3 things into account: how long your credit accounts have been open, including the age of your oldest accounts, the age of your newest accounts, and the average age of all your accounts, how long your specific accounts have been open, how long has it been since the account has been used. So again, if you get a new credit card in the mail, you tear it open, you max it out, you pay the minimum, you're going to have a lot harder time getting approved for things and having a good credit profile than someone, again, who maintains low utilization. You use it, but you don't abuse it, okay? Credit mix, I'm not going to go much more into this. It's 10% of your score because, again, we just discussed this last week. But it's the types of credit that are known as credit mix. Again, they're credit cards, retail accounts, installment loans, finance company, mortgage loans, like I said, open installments, so on and so forth. New credit. New credit makes up 10% of your FICO score. When you apply for new credit, inquiries remain on your credit for 2 years. FICO scores only consider them for a year, 12 months. People tend to have more credit today and shop for new credit more frequently than ever. FICO scores reflect this reality. However, research shows that opening several new credit accounts in a short period of time represents greater risk. Again, financial distress. Why all of a sudden do you need to borrow everyone else's money? Especially for people who don't have long credit history. Actually, another even bigger issue with that is fraud. If a creditor like myself looks at your account, a lender, and I see that, let's say you have 15 inquiries within, let's say, a really short amount of time, less than a month, that's a huge red flag. That either means that you're in severe financial distress or that someone has stolen your identity and they're literally just trying to see what they can get. The types of inquiries too, where are they applying for credit? Are they going to Best Buy, JCPenney's, Sears? I don't know if Sears is still open. That's telling you how old I am. Victoria's Secret, so on and so forth, Home Depot, or are they trying to get like mortgages? What are they doing with that credit in a short amount of time? So that's a really big thing. Your FICO scores take into account several factors when looking at new credit. So again, these are how many new accounts do you have, how many recent inquiries do you have, and how long has it been since you've opened a new account. An inquiry, again, is what results from a hard pull. Hard pulls are in inquiry? How many do you have? Notice it says recent. If you have 15 recent inquiries, that is a problem. If there are an abundance of new accounts, that is a problem, especially the types of accounts. If you're opening up a bunch of charge cards, just be cautious. Final thoughts. Check your FICO score regularly in the contents of your report. That's really important. You can get your credit score free once a year. That is your right. Do not open a lot of new credit accounts too soon. Request a credit increase to improve utilization. So if you've been with the credit card company for a long time and you've had that $300 balance for a long time and you've been paying them on time and in full for a long time, it's okay to tug them and say, hey, you want to kick me a little bit more money, because you've established that trust. Pay on time and you'll be fine. So with that being said, I hope that you all enjoyed this video. I hope that it was informational. I hope that you learned a lot. If you have any questions, of course, you can leave comments below. Next week, we are going to be not wrapping up. I want to do 1 to 2 more segments on this at least, before we move on and discuss something else, because this is going to be the basis for everything else that you and I talk about as far as investing down the line, as far as getting prepared to buy a home. I want to show you how disputes affect your score. There is a really cool tool that I'm going to have available to me where I can help you improve your score. But before we start talking about that, we have to know the moving parts. So again, my name is MJ, and it was a pleasure talking to you. Oh my gosh, like, this has been so surreal, because I remember I kept saying I was going to do a channel, and like, to be blessed enough to come to you every week is just amazing. Continue to keep me in your prayers, good thoughts, positive energy, sending it back your way. I love you all to the bank and back, and I will see you next week. Bye.